Jadwa Investment acquires Allo Beirut's Blackspoon group, and the U.S. announces a 10-nation coalition to combat Houthi attacks. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Saudi-based investment management and advisory firm Jadwa Investment has fully acquired UAE-based Blackspoon Group for an undisclosed amount. Blackspoon is a casual dining player with 10 branches across 3 restaurant chains in the UAE, including Allo Beirut. Blackspoon is expanding across the GCC, franchising over 30 new Allo Beirut locations over the next 5 years. The transaction is Jadwa's second acquisition in the consumer sector this year after it acquired a 35% equity stake in Kuwait's Giza Perfumes. Saudi crude exports increased to 6.3 million barrels per day in October, a rise of 543,000 BPD compared to the previous month. It was their highest level in 4 months. While the crude export showed a sharp uptick, Saudi's crude production fell 0.4% to 8.9 million BPD. Saudi voluntarily decreased oil production by 1 million BPD from July through December this year. The U.S. has announced a 10-nation coalition to defend against Houthi missile and drone attacks on ships transiting the Red Sea. The coalition includes Britain, France, Bahrain, and Italy. Iran-backed Houthi rebels have escalated attacks on tankers, cargo ships, and other vessels in the Red Sea, impeding a transit route that carries up to 12% of global trade. The Houthi rebels are targeting Israeli-linked vessels in the Red Sea in solidarity with Gaza. Nippon Steel says it can afford to pay $14.9 billion for U.S. steel, justifying the huge premium it offered as having sufficient economic rationale, even as the Japanese steel giant's share sank more than 6%. The Japanese steel giant clinched the deal with an offer of $55 a share in cash, which was a whopping 142% premium to U.S. Steel's share price. The acquisition will help the world's 4th largest steel maker become a bigger supplier to the U.S. auto industry. Investors in Australian lithium producer Alcan have voted to accept a $10.6 billion merger offer from U.S. giant Livent that would create one of the world's biggest lithium companies. The new company will be called Arcadium Lithium. It will have a sprawling footprint across major producing regions: Australia, Argentina, and Canada. It will operate across the supply chain from mining to delivering finished chemicals to battery maker customers. A U.S. court has approved a previously announced settlement against crypto exchange Binance and its former CEO Changpeng Zhao, approving billions of dollars in fines for money laundering. The court found that Zhao and Binance violated the Commodity Exchange Act and Commodity Futures Trading Commission regulations. It imposed a $150 million civil monetary penalty personally against Zhao and requires Binance to pay back $1.35 billion of ill-gotten transaction fees and pay $1.35 billion penalty to the CFTC. And Apple has been forced to halt sales of its top-end Series 9 and Ultra 2 watches in the U.S. It comes amid a patent dispute over technology that allows the watches to measure blood oxygen levels. U.S. watchdogs say the rights belong to medical technology firm Massimo, and they could ban Apple from importing the watches. That decision is now under review by President Biden. If he doesn't overturn it, the ban will go into effect on December 26. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.